Neogen Chemical reported their numbers. Revenue saw a bit of a decline of 9.9%. Margins have been under pressure. Margins actually have seen an expansion, but profits have been under pressure. But what is the outlook of the company going forward? We do have Dr. Harin Kanani, MD at Neogen Chemicals, joining in with us to talk about that. Thank you so much, sir, for joining in with us this afternoon on ET Now. And I want to talk about overall, in terms of the numbers, a muted set that came in Q1. But what is it that we are watching out for in terms for FY25, especially and specifically for the existing organic and inorganic business?
So this was so we've seen improvement in our pharma demand as compared to previous. We've also seen good improvement in our organolithium demand. And this was the first year in which we also had, battery materials contribute. So I think all these were positive, but we were still seeing some, less demand in the agro segment. So I think we will keep watching that space. But overall, what we feel in this year, we are expecting, let's say, the non-battery business to at least contribute around 800 crore kind of a revenue. And let's say the battery business to contribute around 75 to 100 crores kind of revenue mostly in the second half. So overall, we are looking at a revenue around 800 to 900 crore in that region in the current financial year, and around 800 crore plus kind of a revenue in the current financial year. And when we are looking at margins, the raw material prices have now reduced to its lowest. And like we've seen stabilize or slight increase. One of the pressure also on the margins is like competitive pricing from China, where some of the pricing are very, very low, almost dumping kind of levels. So I think that remains a challenge, although we've seen them also hit the bottom and then now start to increase a little bit. So overall, if we look in a normal case, our we would have a 18% plus kind of a revenue, but considering these factors and considering the battery business will also be just starting, we are looking 16 to 18% EBITDA kind of margins for the current financial year.
All right, Dr. Kanani, thanks for sharing that guidance with our viewers. But you did speak about pricing. So tell us, give us an update on how's the bromine business going, and are you seeing any pricing revival on that front?
So we have pharma, like the organic chemicals which we make using bromine derivatives, and then advanced intermediates and CSM business. So this is a business where like we've seen which is using the bromine chemistry expertise and then making advanced chemicals out of that. So there we have seen improvement in pharma, we've also seen improvement in our CSM, non-pharma, non-agro CSM demand. So I think overall we are seeing improvement as compared to last year. However, again, when we talk of margins, because the plant is not yet fully utilized because of lack of agro demand, as well as which is mostly export related business. So I think that is a bit lower, as well as pharma, like in pharma also there are still in advanced intermediate, especially there is still competition from China. So that's why the margin will remain in that 16 to 18% kind of region.
Right. If you could just highlight and tell us what could be the potential revenues going forward in terms of the battery chemical business, and from when will it be a significant part in terms of your revenue?
So as we explained, in battery chemicals this year, we are expecting somewhere around 75 to 100 crores of revenue in the current year. The capacities which we already installed in last year on full utilization, they can give us 250 crores, 200 to 250 crore kind of revenue in next year. On top of that, our brownfield expansion, which is coming online this year, will further add to that. And we will also then have the greenfield site, which is coming online in the next financial year. So that greenfield site also will contribute in the second half. So together it will be 250 crore plus some utilization of the brownfield throughout the year and some utilization of the greenfield. So that will decide the FY26 kind of revenue. We have not put a number to that yet, as we receive approvals, and once we have more clarity on brownfield and greenfield expansions, we'll be able to give you some kind of guidance towards the end of the financial year for next year. Overall, we estimate that the entire battery chemical segment, the 1500 crore capex, can give us a revenue potential somewhere between 2500 to 2900 crore. And we expect to reach that, let's say, by FY28 or FY29. So that's the target which we are keeping.
All right, point taken, Dr. Kanani, but also talk to us about your debt snapshot. What's the debt looking like? At what level do you think you'll be at the peak of your debt? And also, do you have any fundraising plans via equity, or are you only going to be focusing on debt?
So basically, the peak debt that we are expecting for this 1500 crore capex, we will be taking debt around 1100 to 1200 crores. And on top of that, regular Neogen debt would be somewhere around 300, 400 crores. So we are estimating around 1500 crore as a peak debt over next 2 to 3 years kind of a period. Like we have kept the option that, if we feel the need for more balanced approach, we have kept the option to raise around 250 crores in terms of our equity. But this can be done at the appropriate time over next 2 years time when we feel the right moment. And again, it can be either strategic or at a subsidiary level or at Neogen, then decided by the boards over a period of time, depending on how the business is developing and to ensure a balanced risk approach over a period of time.
Okay, thank you so much, sir, for joining in with us this afternoon on ET Now. That was the management of Neogen Chemical joining in with us to talk about their numbers and the outlook going forward.
If you like this video, then like, share and subscribe to ET Now.